120 million SARS expense will result in unprofitable GAAP operating income.
Wait a second. So that means Q4, they're expecting her to be, Palantir to be not profitable? Because of this?
She put that as a sort of safety guard, saying, look, I told you. If
dude, that could be a reason why we're seeing insider selling. I mean, imagine we get a headline in February where Palantir misses EPS by 3-4 cents.
Credits to Mariana that she wrote it, probably for the first time, something that we discovered months ago about the SARS, so the stock appreciation rights. That is essentially a bonus to employees if the stock rises above a certain target of 50. We already get there, up to 70. That creates, on one side, the acceleration of accounting that number. So as a stock-based compensation expense, so there is one strong sentence that imagine you are an analyst and you will see we maintain these adjusted EPS unchanged at 38. However, 120 million SARS expense will result in unprofitable GAAP operating income and muted GAAP net income gain.
Wait a second. So that means Q4, they're expecting her to be, Palantir to be not profitable because of this? Wait, hold on. I didn't read this part. If they're expecting, and this is legit, so this is the SARS expense that legally they have to recognize even if the employees don't exercise the SARS because the stock is held above a certain level. And if that's the case, and the headline on February whatever is Palantir is unprofitable, I feel like we're going to get a great dip opportunity, right? If that actually happens, if we miss EPS because of this, and it doesn't matter, this is a legit reason to miss it, but no one's going to care, right? They're just going to see.
Personally, I see that as a bull case for me as an investor.
Me too.
People invest oh my God, imagine if this happens and the bears when will be oh my God, we were so right, this company is trash. But meanwhile, this is just a temporary stuff.
Well, so if Palantir does not get more income from operations, meaning the actual business deals, to accelerate past this $120 million, because they only did $145 million of net income last quarter, we're not going to be profitable. It'll be a stupid reason. But
I haven't done the math on this, but
or we'll at least miss estimates. We might be profitable. Right.
Yeah, I read that and I just disregarded it because I don't see a world where Palantir, if the expected expense that they will incur is around 120 million for the quarter, there's no way that Palantir won't be GAAP profitable regardless. I mean,
they'll be profitable.
It makes no sense. But she wrote that they will be unprofitable. She wrote that in the report.
Well, it all depends on how you recognize in the accounting the stock-based compensation. There was a sentence from the CFO Glazer saying that, due to market conditions, we will recognize more stock-based compensation in the last quarter.
So hold on, here's the question. Does the SARS count as stock-based comp, or does it count as legit taking away from net income?
I would include I would include that in stock-based compensation. That doesn't affect the non-GAAP operating income. So from the operation side, because is before stock-based compensation. But since these are essentially stock options that are given, are not stock options, but because it is like a cash settlement, but it's still something that since now they could be exercised, they become more valuable. In accounting terms, you need to adjust that to new numbers, so they become more expensive, and this adjustment needs to be recognized in accounting before it becomes an expense. And since the stock appreciated already a lot up to September, I don't remember exactly what was the stock price in September, end of September, but it was already relatively high. The company probably will need to incur into this expense. I had this feeling, but Mariana essentially confirmed that the fact that the stock went up, these premiums needs to be recorded as a higher expense. It means that you have a hit on the stock-based compensation, which in turn doesn't affect the free cash flow from operations, But
it
yeah,
doesn't
it
net income.
affects the net income,
Yeah.
and it will affect the cash pile if these SARS are executed. So that's why, like, combining everything is like, like she put that as a sort of safety guard, saying, "Look, I told you." Like, if
Dude, that could be a reason why we're seeing insider selling. I mean, imagine
We're
we get a
always-
Imagine we get a headline in February where Palantir misses EPS by 3-4 cents, just like Robinhood in Q3 of 2023. They missed EPS by like 11 cents for a regulatory fee. So they had to pay $100 million for something stupid. But the
Good
stock went
example.
from, remember, Arnie, it went from 13 to 7. Like no one cared. They saw the headline. Even this time, it went from 30 to 23 a couple of weeks ago.
everything was perfect, but that line.
And they missed EPS in Q3 Robinhood because of another regulatory fee. So if Palantir misses EPS, unless like they get a big contract and that big contract they can recognize and blah, 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 what's something, if they miss EPS because of this, which I think we definitely need to do some digging on, it doesn't matter what the narrative is at 150 billion, it's probably going to fall, right? Like just historically from what we're seeing.
Yeah, I think pretty much anything negative surrounding the like it's so propped up now. I think anything negative can catapult it lower. I have to say, just like Mariana did here, she tried to make some estimates surrounding this. I haven't looked at it at all. Perhaps I should do the math around this. But yeah, if Wall Street don't adjust their expectations, because these are like static things. People know about SARS. They know about where the stock price has gone. Like, if they don't bake that into their EPS expectations, then it's just Wall Street being bad. Like the analysts aren't doing their jobs. Like this is out there. Like you should know this. Mariana knows about this, but
Amir, to your point, that's what happened with Robinhood. They had a expense around the customer match incentives they were giving. Analysts did not factor it in, because if you did factor that in, you would not have a 650 million revenue target, and Robinhood came in at 637. You would have taken it down to like 630, 635. Analysts are dumb. Like they don't adjust their shit. Right?
What happened to the stock? Like it regained everything it lost, right? And
yeah, but then Trump won, and then
because you had the feedback narrative that was very positive. So essentially, it's like, okay, yeah.
The point is, it was a stupid reason for it to fall. I bought that dip. A lot of people bought that dip, and they did well, which happens in the market, right? Irrational dips. This would be an irrational dip. This is not Palantir's fault if they miss on EPS for this reason. But to your point, Amir, if the analysts don't match up their EPS expectations to the inevitability of this SARS expense, and they all know about it, otherwise you're not a really good analyst, right?
Yeah.
Then that could be bad.
Okay.
Can you share the report just quickly? I just want to make sure I read that correctly. Will result in unprofitable GAAP operating income. So the operating income was 113. And
income.
Yeah. So if you look at the 120 expected, Palantir grew their like the difference between this quarter and the last quarter is essentially 8 million. So if you add 8 million again, and I think the operating margin was kind of like, I was kind of disappointed by the operating margin for Q3. So if we assume that they get back to like a healthy operating margin expansion, like I was expecting to begin with, if they add like even the same poor ratio that they did for Q2 to Q3, they would still clear this $120 hurdle and still be operationally profitable. So I don't see, I can't make sense.
But you see what she says. You see what she says, and a muted GAAP net income gain.
Yeah, of course, because it affects the net income after the operating profits.
But that's my point. If she says a muted, then that means she says they're going to be profitable, but it's going to be a very small level of quarter over quarter growth.
Yeah, because the interest on the treasury that goes on, like typically for a business that operates, you would find that the operating income is higher than the net income. But for Palantir, that's been reversed the past couple of like year and a half or 2 years because of the net income. The interest from treasuries. Now, still, I understand it will be muted. Yes, I can buy that. I don't buy there will be GAAP unprofitable on a operating income basis. Like I can't make that math work. I still think they will be operationally profitable. I don't think they will lose that. Now, imagine this: Palantir, of course, is aware of this. Like they have an accounting team. They know what they've done. They know they have these incentives out there. They know what the stock price is done. Definitely. Do you believe that they will let a quarter incur of unprofitable operating margins? I don't think so. I think, like, of course, they can't like pace their own employees. Like, guys, chill with exercising this for a while. Like, pace yourself.
You can't say that to employees. They can't.
No, they can't. But I mean, like, they can't do it legally. But I mean, I don't know. I would be pretty surprised if like all the employees are like, okay, fuck this, let's head for the doors. And then just
I think they will still be operationally profitable, but it will be a muted GAAP net income gain, as Mariana says. This is the first time I'm finding out about this live, so I haven't. This is actually big news to me. And if that's the case, I'm telling you, based on my experience with Robinhood, analysts are fucking stupid. They will not get rid of their expectations because of some idiosyncratic SARS expense that they have to go deep to find. They're going to say, oh, we expect Palantir to grow at 9 cents of EPS in Q4. Palantir is going to come in with 2 cents if this shit ends up happening, right? I'm just making up the numbers. And the stock's going to tank. Like we've been through this already with many stocks. This has happened to Tesla many times as well. I think that's a great opportunity for us. If that's the reason the stock tanks, if we go back to 40 on that, that's great. But
that's what I'm saying. You say that analysts are stupid for not adjusting for this. I would say that they're brilliant and geniuses, because if you look at institutional, like the rush to buy Palantir is like outrageous. I mean, the institutional ownership is like to the moon, right?
Do you think the institutions know that they're going to have a muted GAAP net income gain in Q4?
Well, I think
I don't know any of them know.
Look. Okay, my point is this. I think that they are very well aware that Palantir might incur a hit, and I don't think if they don't adjust for this, I think it's intentional. I don't think they're stupid. I think they want to buy just as much as we do. You know,
the analyst from Jefferies, Brent Thrill. I don't know if he's adjusting for this. I don't know if freaking Citibank is adjusting for this.
Okay. How about this? Put it in the chat. Are you hoping that they adjust for this or not? I'm hoping that they don't, and we get that dip, baby. That's what I'm hoping for. But yeah, to the point, I don't think they're stupid. I think they're aware. If they don't adjust for it, I think it's deliberately not adjusting for it to get a normalized share price again, because like this kind of unhealthy to go into infinity, because when then it finally does drop, I think it might be just equally unjustified to the bottom if you don't get some sense of normalcy in the stock. So I think if they don't adjust, I think it's deliberate.
Yeah.
Look, how many analysts have you seen talking about this SARS before this moment?
Zero.
Arnie,
literally Arnie. Arnie actually read the report. I sent you the report and I didn't even read the full report.
And like, I believe like Mariana is the only one literally taking the 10K.
Do we think Dan Ives knows about this? Be honest.
I think no.
So that's my point. Like, right?
I think Mariana knows because he's one of those analysts, obsessive analysts like me, that likes to read every effing sentence that there is, because even slight changes can be important. Do you remember Dominic noticed there was a line, like a simple line in the cost of revenue saying, well, we got a better gross margin because we closed a very big deal, essentially promising a lot of computing power. It's like, wait a second, like this is the most bullish thing ever. Like nobody apart from Dominic saw that. Okay, so there are these moments where you have a sense that, oh, this information is valuable. And then you check the analyst reports, you realize even the top analysts are not really taking care of it. Mariana noticed that. She put that as a waiver to say, oh, if the stock drops, at least I told you. Nobody else told you. Yeah. But the others are not really taking care of that. Because, look, we're talking about like $1 billion cash potentially disappearing if all this stuff is executed. Now, as investors, that could be like our golden opportunity, but at least we need to be aware of.
And the 1 billion cash, you're saying that's how much the SARS will cost them?
If all the SARS are executed, and I'm not 100% sure they can be all executed like instantly, because that depends on the vesting period of these SARS.
Yeah.
But assuming like a 70 as the maximum value, and there are like 44 million dollar SARs multiplied by 20, which is the maximum value of each SAR, you get not that far from 1 billion.
Well, what if that's the reason it's not going to be a big deal? What if there's only a third of that actually gets executed because these employees haven't been there long enough to do it?
Well, probably you still need to recognize the expense,
Okay.
but not that high. Like that's why like accounting is weird. Like look, already understanding the accounting of your own country is a mess. Then every country has its own accounting rules. So already when I see an Italian company, I need to be aware there are ways with which like on accounting wise stuff are counted differently. So that's why like on the more accounting side, like I get the principles, but I don't know how exactly they are implemented. If there is one thing that I can say, what worries me is typically when you read an analyst report, what is the way they talk about stuff that could happen or not? Like you typically see the wording being like could, should, right? At least that's how I'm also trained. Like I was always like, no, I'm deterministic because I'm convinced on what I'm saying. And my boss was like, no. You never, ever say will. Because if that doesn't happen, you're destroyed. Always use like could, should, maybe, but. What Mariana says, however, the 120 million SAR expense will result in unprofitable GAAP operating income. Will. But that is the scary thing for me, at least. Analysts are never deterministic. Their job is to cover their ass and get fees.
This is new. I think this was the most important thing we found out. This is why this community is amazing, because we get to find out stuff like this. I mean, it would explain the insider selling to me. Like maybe they know, hey, we're gonna have a pretty nasty expense. No one's gonna care if they were told. Obviously, the company has communicated this through their 10Ks and 10Qs, so this is out there. It's public. The analysts, I don't think Louis De Palma is gonna take this into account, or Rishi. So the headline's going to be Palantir misses EPS. And it could happen, dude. Robinhood was having the best run of like the past couple months. And then October 30th, 25% down in 10 hours. And everyone forgets about like the excitement, momentum narrative because they missed their numbers. Fuck these guys. They missed their numbers. We have a better place to put our money. And Robinhood was trading a $28 billion market cap with a $5 billion in cash. Palantir's at $150 billion, So I guess this is one of the things we have to think about. If they miss any numbers, what the street will react to.
I just think it's funny you said, I don't think Louis De Palma or Rishi are accounting for this. I think they're like taking it and doubling it and sending it to the next one, because like if you look at their price targets, I think they have like some meteorite hitting Earth factored into their evaluation and stuff.
Okay, so let's end on this conversation because I think this discussion will be important. Let's say Palantir does tank for whatever reason in 2025. How do you think people will react to that? The community, the player haters, as Alex Karp calls them, long-term investors.
Please hold that thought. That's a great question, and we should end on that. I just want to ask you. You mentioned about insider selling, I think like 3 times now throughout this hour.
Yeah.
What is the current like insider selling status at? Because I don't track it. It's not like an input into my intrinsic valuation models. I completely ignore it. I know that they've been selling in the single digits. I know they've been selling in the 10s, the 20s, the 30s, 40s, 50s. I know they're always selling. So what's different this time that makes you like, I think this is why insiders are selling? Can you like give us the scoop?
I mean, I don't care that much about insider selling either, but Carper sold about close to $2 billion in the past couple months. So let's call it $1 billion a month. If I'm not wrong, I could be slightly off, be 1.7, 1.8. But like, that's a lot of selling, dude. And there's no blame in the world from me to him to sell. I mean, dude, he's the reason Palantir's here, right? He's been here for 20 years, all that stuff. So, but I'm just thinking logically, do you sell $2 billion worth of something?
Okay. So the way
if your financial advisors aren't telling you, hey, Carp, it's time to take some off the table. You're 56 years old. You've been here for 20 years. Take some profits.
Okay, but I understand the absolute value increases compared to when like Palantir was trading at $6 because the stock appreciated so much. So each share that's being sold is a lot higher. But is the actual share count that's being sold a lot
Yes.
higher than in the past?
I mean, yeah,
Okay.
yeah. And also at $6, it was cheap, but they were just selling because they had their shares at 2 cents. At 60, we know it's expensive, like objectively. And so the acceleration of the growth in the shares that they're selling. Again, no problem that they're selling shares, but it's something that we have to analyze about, why. And in long term, is it going to matter if they sold in 2024? No. In 10 years from now, it's not going to matter. But short term, maybe it helps us understand things.
Okay, so sorry about that excursion. I thought there was like some insider like dumping deluxe, but it seems like it's just in line with the past, a bit higher. Okay, we can move on to the last topic. Sorry to interrupt.
Look, insider selling is like a feature of Palantir. This happened also during the bottom. We all we all remember who were traumatized, but at the bottom, oh no, even insiders are selling. It's like, oh no, please.
Yeah, that was a gut punch. At $7 when they were fucking selling, that was a gut punch.
So, and as always, we always shared here at Weekly, okay, yes, like optically, it sucks. But at the end of the day, that doesn't really change the substance. A lot of that sales could be just tax driven because when you receive from as far as we know, like this or even the management is not paid like very much in cash. It is paid very much in stock options and shares. Okay, so when you receive these shares are heavily taxed, like 50% or something. Right. So what you do is as soon as you receive them, you sell them so that essentially you have like some cash. Even just to keep the shares, like you need to sell a part because as soon as you receive these shares, you're taxed. So unless you have like an infinite bank account, every time you receive these shares, you need to sell part of them. So that is a feature of how Palantir operates. It wants to have like employees and management very, very aligned with the future prospects of the company. So very stock-based component. But like for instance, from this chart here, that I can't guarantee like the accuracy on, but I think it looks like in reason like aligned with what we are currently seeing. Like there is now an anomalous selling around here.
Yeah, it's not just for taxes,
And in terms of ownership, like I personally struggle to record like all the sequence ownership of Palantir shares owned by Carp, but because for instance this number doesn't look right.
He has 54 million shares left, 48 million Class A, 6 million Class B. I don't know what total percentage he's sold. I have to do the math on it, but he has about 50 million left.
Like I tried to ask okay, so in like percentage wise, like I think like the B shares are untouched, but I remember I saw like the A shares, like the one that we also get, that like that he reduced a lot of them. Now
I think he sold like 20 million of those basically, roundabout,
to get like a 1.5 billion or whatever. So and there is also like a piece of stock options that we don't know exactly, at least I don't know exactly how much he get that could be exercised, that boom makes that number up again. So let's exclude that. But I think like at this point, I can't really think these are all automatic sales from tax events, personally. Like here,
no way. Yeah,
we see like this very big stuff, and I absolutely agree with you. Like imagine I'm the financial advisor of Carp. It's like, I know you're mad. I love you, but regardless of how convinced you are of the company, like just secure your financial how can I say, your financial, not freedom, but safety forever.
Oh, he would say, dude, it's fucking expensive. Sell like that. Carr's probably sitting in a room with 10 different advisors who are all looking at him like it's worth 150 billion and you guys are barely making $500 million in profit. Half of that is fucking from treasury bills. The market's giving you the best opportunity of your life to exit right now. Take some off the top. Now, for retail investors, if you don't have 70 million shares, you might not need to do the same type of risk mitigation. But for Carp, I mean, it probably makes sense to do some risk mitigation.
What is Carp using his money for? He's like living a frugal life in some cabin. Like, what the fuck is gonna need $1 billion for anyway?
Do you know how many bars there are in the world?